Good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here. It's April 18th, 2024. We're at it once again in what is a, well, sketchy pre-market. Is that fair enough to say? Is a sketchy pre-market? I think it's pretty sketchy out there. So the the entire marketplace comes down to one thing, specifically this morning, and that is we are trapped on the lower edge of the expected move. So, of course, a lot of people are going to come in here and they're going to say, it's this, we need a rally today. Others are like, oh, no, we might sell off. Look, you're trapped on the lower edge of the expected move. You know, a day like today, it's funny because most mornings I come in and I make myself some pretty detailed notes over here. A day like today, there's no notes. There's no script for the kind of crap that you're about to see today, and you should understand that. Right off the bat, if you have a chip on your shoulder, we need a rip your face off rally, I would agree with you. But you should also agree with the idea is we're really close to a major break in volatility, and that is cracking the market wide open. That's what it basically means to be on the lower edge of the expected move. So before this morning's bell, one of the things you want to recognize is, of course, the volume out there is not exactly rocking, which is not surprising. Do not let the lower volume fool you. Do not let the lower volume fool you. You go, well, what do you mean? Of course, there's not going to be any volume. We're trapped on the lower edge of the expected move. Look where the marketplace closed. No one gives a damn. This is the happy place. It's happy as long as we hold on to the edge. It's happy. Happy. We have financials this morning. They do have a bid under them, but it's not the financials that are really going to move this marketplace. The financials, they almost had an up day yesterday. Then you come over to the energy sector, which has seen some sell side lately. It has a very, very mild bid. Oh, I think they like me. Come over to Nvidia. Oh, this is going to be a big one today. Up $10 in the pre-market means absolutely nothing. Everybody's talking about the fact that it is now officially in corrective territory. That's going to be a fun one to watch. You also have Microsoft. Okay, that is slightly down into the cash open. Curious? Yes, it is. So there's a mixed bag of goods in tech, and tech is actually what's going to be in play today. It's not going to be anything but tech. All right. You do have Meta bid, and of course you have Nvidia bid. AI is bid because Taiwan Semiconductor, okay, came out and pretty good note, even though Taiwan Semiconductor is not doing that well. Let's come into the cash open. It's going to be a little slop-tastic. We're stuck on the lower edge of the expected move. Let's come to today's bell. Advanced decline line out of the gate. Better than I would have anticipated, but don't get ahead of yourself because big tech doesn't look that good. I mean, for the most part, all of big tech is massively unchanged with a side order of Tesla getting smashed again. They don't like me anymore. Tesla, that is. They do not like Tesla. I don't even know who they are, but they are not liking Tesla. Anyway, we're positive 800 ticks this morning. Not much of a read though. Like what I mean by that is, look, you can see the positive tick. You can see a positive advanced decline line. And to be quite frank, it's all for nothing. It's for nothing because Nvidia, everybody on the street's going to be watching this today, right? I mean, I can tell you right now that this is how you start pushing stocks lower, is because there's an incredible anticipation, okay, anticipatory move inside of Nvidia that it's people are looking for the bid back under it. Look, this morning, okay, the options order flow in Nvidia, which is, it's just so crazy that it's this transparent. So for those of you that are a little bit newer, you have traded at the ask or above and traded at the bid or below. And this, I mean, it's important. We'll look at the SPX in just a second, look at the expected move, but this is really important because if you look at a market and the market's like, 1010, okay, at, we'll say 10.020. So it's 10-cent wide marketplace. And this is your bid, okay, and this is your ask. What it means to be traded at the ask or above is they just grab it at the ask. There's no working the order in between the marketplace. There's nothing. Now, granted, it's only a 10-cent marketplace, and traded at the bid or below just means you hit the bid. But the fact of the matter is, when you're trading at the ask or above, you know definitively that they're opening that position with a buy. Okay. And when you start looking at the options order flow, if like, traded at the ask or above on the calls, there's some huge call buying, that would be, again, a very, very bullish sign. You're not seeing that. In fact, you're seeing quite the opposite. They're selling calls in here. We have not yet seen anybody buying puts, but the day is young. And as I said to you, if you come in here on days that we would say, quote unquote, we are in volatility, which we absolutely are. If you come in here on any day and say like, oh, this is going to happen, that's going to happen, I kind of get a little annoyed by that, and I will put you in your place, because that's that kind of crap will only get you and everybody else. You get your head taken off. You don't come in a trading session like this with any preconceived notion about what's plausible. You just don't. Okay. I can tell you right now, what is going to be in play today is going to be tech. What's going to try to rally has been the financials. Look where the financials happen to be. Okay. Right above yesterday's high. The financials have gotten smoked. Okay. So you're in this like crazy scenario today where the financials are going to rally. The energy sector is going to rally. The tech sector right now is actually drawing us back down. But with all due respect, okay, even though the tech sector is pulling us down, can you imagine if tech started to rally today? We already have financials higher. We already have energy higher. We could explode back. Okay. I'm giving you both sides of this marketplace intentionally, because if you don't look at both sides, you're going to get crushed. Okay. Now, why am I so incredibly two-sided on a trading session like this? Okay. Because as I said to you, we're trapped on the lower edge of this expected move. The higher the volatility, okay, the more freedom we have around this level. So let's discuss the level here in the SPX. Again, this is the SPX, right? So I'm just going to label it again up here, SPX, the mother of all products. And a critical level is 50.23. So why is the 50.23 such a critical level? It's the lower edge of this week's expected move. The expected move this week was $100.36. What the $136 represents, it's how option premium depicts forward risk. It's from last Friday. The Friday to Friday expected moves are, of the most consequential to the marketplace. It's where the huge volume rolls over. The $100 expected move is basically like an average of option pricing. So it gives us the ability to handicap forward risk. And week in, week in and week out, you will see us hovering in and around these edges. Yesterday came down to it, did a little dance, made a little love. I literally yesterday morning said, if we're coming down, okay, below, it was 50.35 that we're going to get dragged into it. I mean, it couldn't have been more scripted than we handed to you yesterday. It was given to you on a silver platter, wrapped up. It was nice. And as I was saying, as soon as we actually came off, you're like the 50-40s and so forth, we dropped precipitously. By the way, here we go. So we're dropping right now, but we're dropping into the lower edge of the expected move. So don't get crazy just yet. Okay. Right now, all we're doing right now is skirting the lower edge of the expected move. And this is exactly why I wanted to discuss this, because you get this freedom around this expected move. And what I mean by freedom is, okay, there's X number of points that we can move above and X number of points we can move below without breaking above or off below this line. Okay. In average volatility, I would say it's plus or minus about 12 points, but we're kind of rocking out here. And forget, screw VIX, man. VIX is 30 days out. We're in the here and now. We're kind of rocking right now. There's no question about it. I'm going to put it at about 15 points plus or minus, which would then imply, okay, things are going to get dicey if this is 50.23, just a hair below, okay, this 50.10. So that's, by the way, that's 13 points. But anything below like 50.10, the proverbial beep is gonna hit the fan. And what will happen is if we start trading down to this level, obviously we're close, we're what, just a few handles off of that, 6, 7 points off of it. But if we start trading down there, okay, we'll punch lower and you will know it. Okay, you will know it. And you go, well, how will I know it? The S&P futures are the hedge, okay, for the SPX, S&P futures. And what will happen is as we kind of ebb and flow lower, okay, it'll feel like we just got cracked over the head. The marketplace will project huge lower, big volume. By the way, the volume right now is massive. So if we don't calm down right now and bounce, we're in trouble, big trouble. So my assumption is just based on what I'm seeing on the screen. Look how substantial the volume is in the S&Ps. This is a point where we better mellow out right here, right now. Volume needs to drop. We need to moderate, maybe come back up. Otherwise, things are going to get downright scary. And this is exactly why I said this morning before the cash open, I was like, normally I come in here with a lot of notes, some things I'm looking at, things to talk about. A day like today, out the window. Okay, like literally, you can take your little pad and just chuck it because there's nothing that's going to help you on a day like today other than looking at the tape and a recognition of where we're trading right now and what is likely to influence markets. This is also, okay, this is also fairly critical. The bond market right now, it's not taking center stage. And you're like, well, why? It has been in previous trading sessions, okay, in the last 2 weeks, the bonds have kind of taken center stage. It's actually the last 3 weeks. The bonds, though, at this point, have kind of become a little bit more of the sideshow. And the preeminent thing to discuss, of course, is going to be Nasdaq. And as I said to you, it's all Nasdaq today. And here they come for Nvidia. All right, we're coming for you, Nvidia. I said to you unequivocally, this is going to be the stock, right? We're only open 9 minutes. That's why I just did this little description over here. Oh yeah, we are buying puts in a huge way right now. So this, okay, it's not the first time we've seen it, but by far, that is the biggest action that we've seen. What we are seeing right now, okay, and I am going to literally take you through it and script it because we've only done this once or twice to the downside, okay? What we're seeing right now is puts being bought. You go, well, how do you know? Because look, okay, they're trading at the ask or above. Now, this is not mom and pop sitting at home on, TD Ameritrade Chuck's platform. Can't say TD Ameritrade anymore. As of like the beginning of May, it's Chuck. They're going to fold the whole TD Ameritrade brokerage, side of it. Okay, I'm all chucked up. Anyway, you are seeing puts being purchased. Now, before I go into that, I'm also going to show you in Meta. In Meta, okay, there are some calls being bought, but Meta is sketchy, and that could very well fade. Okay, fade means sell off. I'll come back to that in a moment. Nvidia, okay, puts are being purchased. Now, question is, are they, the one thing I say, puts are being purchased. So you know that there's downward pressure that's going to be in Nvidia, which I'll explain in a moment. The thing that you don't know, though, is you don't know if that's going to continue. Like they're going to come out of the woodwork. You just assume they're going to continue in here, but we don't know that. And all you have to do is just look at this number, and it's jumping out there. Like the numbers are not exactly soaring, but if these numbers start to take off, see, things kind of mellowed out. It was an all-out blitz to buy puts in Nvidia. And if that comes back, okay, the stock gets absolutely annihilated. And you go, well, why? Why does the stock get annihilated if people are buying puts. Okay, the way it works, it has to do with what we often term dealer gamma. Okay, for those of you that are not in the know, the way it works. Okay, let's say that we have trading firms buying puts. So traders, buy puts. Doesn't matter what puts they buy. Okay, predominantly though, we would assume that they're buying short duration, like 50 delta puts. Okay, so the traders are buying puts and they're buying them in huge quantity, and they're just buying them on the ask. It's like, hey, okay, what's the price on those puts? 10 at 10.20. Go, I'll take them. I'll take them at 10.20. Give them to me. Okay, and then they go the next set of puts. Oh, those puts are 10.30. You're like, give those to me too. Okay, everything that comes to market, buy them, buy them, buy them. So traders are buying puts. Who sells these trader puts? Who will sell them puts? Because when you buy puts, what you're producing, is negative delta. So the trader goes out and buy puts. And when they buy puts, let's say they're negative 500 deltas. What deltas? Okay. I'm trying to do a V. Nvidia deltas. Okay. So traders buy puts. Okay. Buying puts produces negative delta. The market maker, which is the dealer, right? The dealer goes out and sells those puts. And by selling the puts, the dealer is actually positive delta. Okay. The dealer immediately does not want positive delta. So what do? Well, if the dealer is positive 500 deltas, the dealer would actually go out and mitigate that exposure by selling stock. You'll never guess what stock they're going to sell. They're going to sell something called Nvidia because it's in Nvidia. So they're actually going to sell shares. Now, if the stock continues to move down, the dealer has to continue to hedge in the dynamic of the marketplace. So if Nvidia were, for example, to sell off a little bit here, all of a sudden, these monkeys right here have to sell more stock because they have to continue to mitigate what is a malleable or what's called soft delta. Okay, so everything right now in this entire marketplace hinges not just on Nvidia, but it hinges on the idea of dealer gamma. Doesn't matter what you think. Okay, all the crap that you see on CNBC. Why you think about Microsoft? I think it's a pile of crap. What do you think about Microsoft? Well, I think it's a pile of crap too. The only pile of crap is the discussion of Microsoft. If they were going to explain anything, they would actually explain dealer gamma, because dealer gamma is the only thing that's really going to move you on an intraday basis. So now we have a little bit of a pop back. When we pop back, dealer gamma will basically cover shares. So you can get this like sell, 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 pop, sell, 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 and you get these wild dynamics. Okay. Now this is important. As Nvidia rallies back up, it is saving the entire day. That is the trading session right now, is here in the Nasdaq. The Nasdaq has had a bid under it. It still looks though really sketchy out there. It's sketchy in them there hills in any regard. Okay, not trying to pick on CNBC because they suck. Okay, I'm just trying to tell you that nothing in the financial world, is what is often told to you. And I kind of get annoyed because I see stuff like in our chat room, and this and that. I'm like, look, at a time like this, especially when we hit a patch of volatility, no one gives a damn what you think. No one gives a damn what any MACD happens to be. They don't care. We're on the lower edge of expected move. No one's even thinking about next week. They don't care. CTAs, which is, funds that are using algorithms to trade, they don't care either. CTA is only reacting to action that's on the screen. Everybody in a marketplace like this is right here, right now. It's what happens the next 5 minutes. They're not thinking 5 days or even 5 years. And yes, you get some registered investment advisor. I'm not picking on you, you registered investment advisors, but you get a registered investment advisor. They have to have a rosy outlook. They got to get on TV and be like, yeah, we're going back up, baby. This is the time to buy. What else are they going to say? Their entire business, is exclusively based on one concept and one concept only. What's the only thing that matters to a registered investment advisor? Okay. Think about it. It's the only thing that matters to a registered investment advisor. How do they get paid? They're not allowed to make commissions. They're not a brokerage firm. So how do they get paid? Okay. It's called AUM, or assets under management. So the only thing that matters to them, okay, is the fact that, for the most part, hey, you have to keep the assets under management. To keep the assets under management, what are they going to do? Let's sell Microsoft and you just take your cash back. Well, that doesn't really help them, does it? Okay. It's really kind of funny because when you start thinking about the entire industry, like registered investment advisor, they make anywhere from, it depends on how big they are, but they make anywhere from, let's say, 0.5% a year, okay, up to almost 2%. And again, it just depends on what kind of products they're trading and so forth. But the point being is no one likes when they're in cash, because like, what the hell am I paying you for? Okay. So the problem is, in the short term, you got to block out some of the noise. Everything right now is about the lower edge of an expected move. Okay. Clearly it's about Nvidia, because that thing just, got swallowed in the morning and then rallied right back up. Meta apparently has the cure for AI. I have no idea what a pile of crap that thing is. Okay. They're the future, I tell you, or possibly the past. Okay. Apple, there's no good news out of Apple, but it's actually even up today. Anyway, it's a tech day and it's a tech world and you're just living in it. So things started off today with a little bit of volatility. Okay. And look, in the end, where are we right now? Ironically, we're sitting literally on the line. Okay. Can't make that crap up. Literally, from yesterday into today, it's all about skirting the edge of this move. And look, I don't want to discount the ability for us to rally either. I don't want to discount the ability, because if you're thinking to yourself right now, logically, it's been a rough few days. Look at the last couple of days in here. Okay. I don't care that I've expected moves, but it's been a rough few days. Friday, some big sell side activity, right? Okay. A little bit on Monday. Tuesday, things kind of mellowed out. Wednesday, yeah, yesterday was a little ugly. Okay. I mean, I like it. So it's got a little ugly. And today, of course, you're thinking in the back of your head, here it comes. It's going to be the quintessential rip your face off rally. I wouldn't disagree with that concept, that today is the day for the rip your face off rally. I agree. But the problem with that notion is, lately we've seen every time we try to rally, people are like, I'm out, baby. I had a good 5 months, and we sell off again. Okay. That is going to be problematic, especially if we rally early. Now, the S&Ps are so beaten down, you could rally easily 50 handles today. Okay. In fact, it's worth noting. So I was looking at the weekly expected move. Okay. But let's go to think back. Okay. Let's discuss the expected move for today. Think back. Come on, you little son of a. Oh, this platform really pisses me off. Okay. Today is it the 18th? Holy crap, it is the 18th. Oh man, got more of my wife's family coming today. I just realized that. Oh, I looked at the date and I'm like, it can't be. And I'm like, God, it is. Wife's family, sister-in-law, brother-in-law, whatever the hell you call them. Okay. A guy that's dumb enough to marry the sister. That's what I'm going to call him from now on. He actually like him. I don't like him. Okay. Can get rid of the sister, but he's all right. He can stay. All right. He'll sit there and drink with me. It's good. It's good. Anyway, the expected move today is $41. Sorry, cracking myself up over here. Okay. What? No, nobody has like, it's not even like it's in-laws coming. Okay. It's in-laws coming. It's not, it's not great. I think they're here for like a week too. Okay. You know what they're going to do, right? They're going to eat my food. They're going to eat my food. They ain't going to drive my car. Okay. There's rules. Do not drive my vehicle. Okay. Goes downhill from there. Anyway, with a $41 expected move today, you can expect that we're not going to be probably on the edge of this expected move. And there is one thing that I will tell you about expected moves. Yes, there is a higher probability of being above the expected move than below, but that doesn't matter. And you go, well, why doesn't it matter? I got to stress this to you because I know that people love to use probabilities, okay, to almost like, if you will, manipulate themselves into believing something, okay? Um, they found me. I don't know how, but they found me. I'm not on the island right now, okay? Not on the island, okay? I need to go back to the island. All right, so there's an interesting probability that's, you know, it's discussed a lot. So these levels, this is a standard deviation, right? This is just a standard deviation flipped on its side. What I mean by that is this is the distribution curve. Okay. In fact, there's even like a distribution curve off of this. If you go to studies, go add study, volatility studies, okay, and probability of expiring cone. Okay. That's my baby. That's my baby. Anyway, that's, it's distribution curve. Anyway, off that. Off with your head. So there is an albeit higher probability, okay, that we stay at the end of the week inside the expected move, right? Everybody would agree with that because it just, and again, I'm going to give you the simplicity of the statistics. So what's the chance of being inside the expected move? 68% of the time. So we should end up in here, yada, 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 yada. You know what though? Okay. I've actually done some homework on this. And the homework that I've done on it is fairly interesting. Even though there's a higher probability of being in this range, where we are right now, if we break outside of it, the move outside of it would be considerable. Okay. What that basically implies is, like, you can say that, oh, there's a 70% chance we're going to be above this line by today's close. Yes, but on the 30% chance that we break lower, okay, hell comes with it. Think about that for a second, because this is where I hate when people are like, oh, yeah, how often do you write in this business? And I go, it doesn't matter how often you're right. Okay. I do trades all the time. They're 95% probability. But that doesn't matter. What matters, okay, is the understanding of the other side of the trade. If you said that 5% of the time, okay, I could make $1 million on a trade, you'd be like, that's the 5% that I want to do. Well, I'm telling you that there's a lower probability, okay, of us breaking below. But today, the real opportunity is if we actually do break below. If we break below the lower edge of the expected move, and as I said, kind of hell comes with it, it's going to be a big move. And that would be spectacular. Okay. By the way, if you haven't been here very long, I like volatility. Okay. Volatility and me, we get along. I understand volatility. Okay. I can't tell you much, when we're rallying, because you're like, oh, this is just ridiculous. We're in a feedback loop. It's like listening to the same song. Okay. It's maddening, absolutely maddening for the last 5 months because it's the same song every single day. And you hear it every single day for 6.5 hours a day. And you're like, son of a, okay. And then we actually crack into some volatility and it all starts to make sense. But where we are right now, we haven't had the big volatility break. Like nothing in this marketplace has cracked open like a cantaloupe. Okay. There's no melon smash going on just yet. But I can tell you one thing, we are really on the edge right now. Today, tomorrow, pretty pivotal. And you can't think beyond that. Okay. That's because you have in-laws coming. That's why I can't think beyond that. In-laws, incoming in-laws. Okay. My wife does not have access or a subscription to TheoTRADE. Okay. And it's going to remain that way. I shouldn't say that crap because Jeff is probably listening. That is Jeff Roth. And he's probably like, I'm going to give your wife a subscription to TheoTRADE just so you can't talk crap about the family. That wouldn't be good. That would not be good. Positive spin on that is her parents left in the beginning of April. Okay. And his other family coming now. It's rough. It's very rough. Okay, continuing on over here. Yeah, actually, it's an interesting thought. If you are new, you're like, what the hell is he talking about? And what's going on here? Okay. Well, what's going on here is this is where you sit. Okay. and you kind of have to stalk the marketplace a little bit. I mean, I know that sounds like, weird, but you have to sit and you got to wait. Okay. On a day like this, be very quiet. We're hunting market. That's kind of what you have to do in here. Because every move that kind of happens in here, you're like, here comes the rally. It's not a rally. Okay. Until you're, this is 50.23. You got to be about 15 points higher, which you're like, that's a big freaking move. It is a big freaking move, but nothing will matter. Like, this is all noise. The volume will drop, okay? And it'll all be noise. As I said, the volume will drop. It'll be noise until we make the bigger break, okay? And the bigger break, yeah, hopefully it happens in this first hour of trade. All right. Hey, Brian J was telling me how to get rid of in-laws. Oh, please, I'm feeding them, man. They're not going to leave. They're not going to leave. Okay. The bright side of that, though, is that the house we're living in right now, I have to rent a house. It's brutal. I don't like having to rent a house. Okay. For the low, low price of it's ridiculously expensive. So we're finally coming into summer, but during the summer, I'm going to leave and go to the island. Anyway, yeah, I had to rent a house because this house broken. The house I'm in now, house broken, house broken, house still broken. House is going to be broken probably until about February of next year. Sucks, absolutely sucks. You know, if anybody's ever had a fire or a flood in your house, I do feel for you. It is not a good situation. All right. It's not a good situation, and then yet the in-laws come anyway. They can really feel the they're really feeling it. So you have the financials breaking to the upside right now, and I want to be clear about this. You have the energy sector that's kind of picked its head up, but not really doing much. It's still, okay, unequivocally, it's all in tech's hands right now. So yeah, you should kind of be on Nvidia watch because Nvidia kind of stalled out. Meta doesn't make a whole lot of sense to me right now, but that's okay. I've been in stranger positions over here. All right, making sure we're good to go. I'm okay to go. Sorry, I got other traders texting me and so forth right now. Yeah, the S&Ps are kind of picking up a little bit, and it's all right now. I mean, some of the price action you're seeing, it's the financials that are really starting to pick up. And what I'm looking at though is you're like, oh, you're so close to breaking to the upside, but Nvidia looks the opposite. It's not moving, and you really are. Even though the whole marketplace is today kind of hinging on this, you have to understand that Microsoft is also headed towards the lows of the session. So even though the Nasdaq, you're kind of like feels like it's going to recover, the Nasdaq's in trouble right now. Okay, it's more trouble than you realize, and it's going to start to pull things back down. But we're still seeing a rotation, which brings to question. Look how positive the advanced decline line is today. Okay, this again, as I said, no notes on a session like this. You got to go with what you're seeing on the screen. I'm going to give you a big cautionary tale for today, and I'm going to tell you exactly why. The advanced decline line is really good, really good. But we have the threat right now of breaking lower. You're like, well, how could that be? It's because the big market caps are the ones moving things, right? Mega tech is getting mega hit. And this is no more mega in Tesla. Okay, that's mega done. It's only it's only $500 billion these days. Okay, come on, $500 billion. Elon Musk, he's barely going to be able to afford 6 rockets this year. Anyway, the point being, okay, it's a very precarious place to be, is what I'm trying to get out. Okay. Why is it such a precarious place to be? Because you realize what can happen here is if tech starts selling off just a little bit more than it is. Okay. And I'm not saying it's going to. And again, I'm totally both sides of this marketplace. We could explode higher, we could sell off. If we sell off, though, this would be like almost worst case scenario today. Why? Because what it would do is if we started selling off in tech, it'll drag the entire advanced decline line with it, and it'll start hammering into the financials too. The financials won't withstand sell side activity, even in tech. It'll start to cause correlation to hit in this marketplace, okay, and it'll pull everybody down, and it'll get ugly. So just be aware of it today. You have a lot of downside risk. Again, I am not trying to diminish the idea of the rip your face off rally, okay? Yeah, but the truth be told, you got some big pressure in here right now, and that pressure to me, Microsoft doesn't look good. Obviously, Nvidia does not look good. It just looks sketchy as can be. Tesla already got pummeled today. Looks like it's going for another round. But the ones that really bother me more than anything have to be like stuff like Google. Okay. I've said this for the last 3 weeks, okay, since some of the volatility started, unscathed, unscathed. And you don't get out of markets that are, volatile unscathed. So when you're looking, and you want to be objective as can be, but when you're looking at a marketplace, okay, you want to start to look and think, if we're going to go down, where's it coming from? It's coming from Google. Google has to go down and go down big. There's no question about it, but its earnings make it difficult to trade, right? Meta's got to actually be on the forefront of some of the sell side activity. Its earnings are literally next week, okay? Makes it a little bit more difficult. Microsoft is starting to see some selling going on. Today, it is the leader in the pack to the downside. Again, I'm discounting Tesla because Tesla, okay, it's kind of an afterthought at this point. It's only a $500 billion company. What's $500 billion amongst friends? So you got to be, again, very, very mindful now. Microsoft starts to slip, okay? Nvidia starts to follow suit, see some more sell side activity, and all of a sudden, they'll start selling financials again, okay? And if you start selling financials, it's over. It's over at that point. It would suck the advanced decline line in. And the way I see it, okay, this is not a positive advanced decline line. It is, but the positive is actually a negative. The negative is there's 62 other things on the screen right now that can be sold in a marketplace that's holding on by a thread. And that's the negative of the positive. You know what's great about me? I can turn anything in to the most like dire thing ever. I'm warming up for the in-laws coming later today. Don't worry, everything's gonna collapse. I'm warming up for the in-laws coming. You got to get good at that stuff. Okay. If like, wow, you really have an optimistic husband. Okay. It's good stuff. Okay. With that, we have today an absolute, how do I say this eloquently? Crap load of Fed speak. So a full-fledged crap load. How many speakers are there today? I don't even know. There's like 5 or 6, I think. I think there's a John Williams. I don't know. I looked earlier. Okay. I don't even know how many Fed speaks there are. There's Fed speaks. Okay. And when the Fed speaks, no one listens. But it's important just to know that, yeah, Loretta, Mester, yeah. I'm just looking right now. It's not Powell though. No one cares about that. Nobody loves me. Okay. Oh, here we go. Michelle Bauman, John Williams, Ralph Bossick, Susan Collins. Okay. There you go. It's lovely. Okay. So there's a lot of Fed speak. Crap fest. Yeah, it's crap fest of it. Again, the Fed speak is noise. The only thing that isn't noise, when it comes to the Fed, there's one thing that's not noise, and that's this. Okay. This is not noise. This actually, this is traded, right? So June, there's now an 85% chance of no cut in June. You're out to July, okay? July, there's still a 60% chance of no cut. The first time the cut really comes into play, by the way, I said this like 6 weeks ago. So the first time they're really going to consider a cut, there's a meeting that's in July, and then you don't have another one to September. So there's a long gap but it's Jackson Hole. The first time they really are going to discuss a cut is going to be in Jackson Hole. Okay. So Jackson Hole happens, I think, in late August. And that is where, if they're going to make a decision, okay, they meet in Jackson Hole. But even by November, the highest probability by November or even December, okay, the highest probability right now is a quarter point all year. So for the most part, what are we saying? Rates, they're not changing. So that leaves the bonds, in my opinion, to their own devices. And the way to look at bonds at this point isn't just the sell side activity in bonds. Okay. To look at the interest rate, the interest rate is becoming interesting because we never hit officially the oh so important, the big 5-0. Okay. And that also kind of concerns me. I just, on a day-to-day basis, yes, I look at the bond market, but I'm thinking on a broader scale over here. We never hit the big 5-0, which is bonds rocking over here and actually hitting 5% would be kind of a critical break. Now, if that doesn't cool inflation, I don't know what will. Markets are very, proficient, at regulating themselves to some degree. All right. So if markets are, frothy and there's a lot of inflation, the interest rate in the 10-year will go up, to the point where it should diminish that to some, degree. A lot of people that are like, abolish the Fed. I think Jeff Bierman's one of them, Jeff Bierman, he's not a fan of Jerome Powell. I don't dislike the guy. Okay. He just needs a hug. I'm just kidding. Anyway, the fact of the matter is bonds at 5%, okay, or I should say interest rates from the 10-year, okay, at 5%. A lot of people want to call that. I don't know if we're going to get there, but it would be interesting to get there. The one thing though that I would say, and I say this without any hesitation whatsoever, okay, is this. When you look at the S&Ps, and I constantly want to remind people of this, when you look at the S&Ps and you think about inflation and inflationary pressures, okay, I said this earlier in the week and I'll say it again, the Fed has a dual mandate. Keep people basically employed, keep inflation under control. How do they do inflation? Interest rates. How do they keep people employed? Not screwing up inflation, okay? But one of the things that, like, I don't think the Fed, they understand this, but I'm not sure the implications are clear. When asset prices are higher, in this asset, in this case, is the S&P 500, when asset prices are higher, how do you curb inflation without beating the crap out of the S&Ps? I'm curious about that, okay? Anyway, why and how, okay? Why and how? I'm just kind of curious on that front. By the way, we're getting a little more to the upside over here. I'm of the opinion you can't kill inflation without killing asset prices to some degree. Can't kill inflation unless you actually start to injure the housing market. The housing market, though, is unique right now because there's no inventory, still very, very low. So the housing market might be able to squeak by. I don't know how, though, you kill inflation without killing asset prices because they are one and the same, in my opinion. And again, that's my opinion. If there's any negativity I would give to the Fed, is that the Fed has to take a definitive bias towards asset prices and hammer them because they can't. You can't slay the dragon without killing the dragon. Nvidia's actually got a bid back under it. Okay, and this is actually what's carrying the Nasdaq back. Okay, take a look. The number of puts being bought is diminished. Now their puts are actually being sold. Okay, there's calls actually starting to catch up. The order flow is very, very even at this point inside of Nvidia, but it's wild out there right now. And Meta is exploding to the upside. Okay, it's we're back to like the one stock market. This is the first real chance today. Okay, at somewhat of a rally. But before we get there, before we actually get to a rally, what do you do in Microsoft? Okay, if we're going to rally, Microsoft's the stock to buy a call in. Okay, if we're going to rally, Microsoft is the stock, okay, that you'd want to buy a call in. It's an expensive call. It's not fun. Okay, it's not glorious, but this is where you'd want to go. I think that this trade would have fairly limited risk, okay, on an intraday basis. And 110 bid, and that's what happened. Holy crap, they actually filled me. Okay. I bought a call for like 110. Okay. I don't know. I don't like myself for it. I'm going to take a shot on this one. It's total flyer. So I'm buying a call. Okay. And I'm going to explain a little bit about it. First of all, this is purely an intraday trade. If markets break to the upside, Microsoft will turn into a leader. Got to get rid of this though by the end of the day. Okay. And again, even if we break down, this trade probably has, let's talk about 250 of risk. Okay. So you buy this right here, let's say at 315. If the stock drops, okay, another $2.50, I'll clean that up so you guys can actually read it. Okay. Let me actually go to the board over here. So this is a really interesting trade, right? If the stock drops by another 250, your 310 will basically be worth $1.90. Okay. So your 310 will be worth $1.90. If it rallies by 250, your 310 will be worth about, let's call it like 485. Okay. That would be kind of the setup over here. So what's the risk to the downside? Was that about $1.20 a risk to the downside? Is that right? Okay. To the upside, what do you got over here? Okay. Not bad. I mean, even if you're only making like, let's say, I'll even round it to like 480 in here. Okay. It's not bad. You know, you're probably $1.70, $1.80 in terms of reward. It's not bad for like a 50-50 bet if we are to rally. Sorry, taking crap for having bought a call. I know you don't see it that often. It's disgusting. I feel so dirty. Okay. I had to throw that one out there though, because I think for me, for an intraday, it's actually a pretty good hedge for what I have on for an intraday basis. Okay. It's a pretty good hedge for me. So just ease up on me right now. Okay. By the way, it's the first time like you'll ever see me buy a call right now. I've bought plenty of calls on here, but it's the first time you'll see me buy a call and hope that I actually lose money. Oh, I hope I lose money on this one, but I'm buying the call because if we're going to rally, it's Meta's there. Nvidia can pick up a little bit, but if we're going to rally, Microsoft's going to rip. Microsoft's going to rip. And I think that's actually a great risk reward in here because selling off another 250 in here, that would be huge. I mean, that's hitting the expected of the entire like remainder between today and tomorrow. That would actually be a big sell off. So crap can happen. Crap can happen. Yeah, it has to happen once in a while. Okay. Just making sure that everybody's good with that one. Anyway, it's pure intraday trade. I'll be out. I'll be out by the end of the day. Yeah. So if you're looking at the expected move, you're looking at the weekly expected move. What I was actually referencing in this case, the daily expected move. I know we're below the weekly expected move as well, and I'm fine with that. But I see us kind of edging just a little bit higher. Okay. I see us also very, very, okay, be very quiet. We're close. We're not there yet, but we're starting to get close to like somewhere right in this neighborhood here. We would pop to the upside and you would know it because the volume would surge. But I cannot stress this enough. Okay. We ain't home yet. We're not there yet. The volume, watching it very carefully in the S&Ps. I'm watching the activity. Okay. This marketplace at this point, it hasn't broken to the upside. We're just as likely to pull back over here. And as I said to you guys this morning, you have to kind of like sit here and stalk the marketplace, but I came out and saw what I think is a fairly viable risk reward. Okay. But if I'm wrong on here, so be it. Okay. And I will like it. I will like it. There's some questions about VVIX. This is the volatility index. Look, it already did its thing. VVIX now, push it aside. You don't have to worry about VVIX unless we go into a real bout of volatility. Don't worry about VVIX. Why? okay? Because VVIX, it basically already indicated that anybody that needed a hedge got that hedge on, right? And then it subsides. VVIX is active in the first shots being fired. In the next shots being fired in the marketplace, what becomes active is the volatility futures. The volatility futures, they're still 30 cents away from going into backwardation, right? So it's kind of cool, kind of cool. All right, so last thing I did want to mention, somebody was, asking a little bit about a few stocks and so forth. We'll talk about Netflix too. Taiwan Semiconductor earnings. Okay. And this one surprised me because they actually threw out pretty spectacular numbers. Okay. Oh, right here this is the important point in the marketplace. Taiwan Semiconductors threw out actually a pretty damn good quarter. Stocks down. Okay. Couldn't happen to a better firm. I mean, I have no idea. When I say I have no idea, I mean, like, look, the only thing that matters to me is it had a $9 expected move. It's only moving $6 right now. So there might be some more room, okay, to the downside in here. Just be aware of that. Taiwan Semiconductor. I wanted to bring up Micron. Micron has a very small bid under it. Okay, you know why Micron has a small bid? Anybody know? Why does Micron have a small bid? Because they're receiving a $6 billion grant from the federal government. Okay, where the hell was I in that one? $6 billion grant. Okay, I'm really dead serious about this. I would love to know, does anybody from the board sit around and just laugh their proverbial beep right off that they're getting $6 billion to do what they're supposed to do in the first place? I know it's to build chips here in the United States. That's what they do. They build chips. Okay, but a $6 billion grant, and it's, by the way, it's a grant. It's not a loan. They just, here's a check for $6 billion. Do what you will with that. Oh man, for some reason, whenever I think about like a company getting handed $6 billion like this, I mean, completely handed, not a contract. The only thing they have to do is they have to sign off and they go, yeah, we'll build chips in the US, which they're already doing. Yeah, we'll keep production. Okay, sure. Maybe we'll even move it to Arizona or whatever. Okay, it's crazy to me. But I can't help but think of like some of the biggest corporate fraud. Okay. For some reason, every time I think of like getting handed $6 billion, like Tyco comes into my mind. Like golden toilet seats and crap like that. Like, we had no idea what else to do with the $6 billion. I mean, hell, we bought a golden toilet seat. He had like a $10,000 umbrella. Okay. It's good stuff over there. Anyway, it's good. Okay. Yeah, I know Intel got almost $9 billion too. Very, very aware, okay, that everybody gets grants. So you pay in, your thousands of dollars and they get your billions. I just think that there's a better way to handle this. Okay. I'm not getting political, but I'm pretty sure there's a better way to handle this. Like, give them a tax break to only build chips in the US. You get a huge tax break. It's not like they're paying taxes anyway, right? But they can only build chips in the United States. And for that, you get a special break. Okay. Oh, anyway, don't start me on student debt relief. Okay. Again, that's the only thing that like I go nuts. Okay. I go nuts over student debt relief. Okay. I don't care what your thoughts are on it. I don't like it. I don't have to like it. And I'm never going to like it. Okay. Never going to like it. You ever crawl through a freaking attic for like months at a time? You tell me how much you like that. Okay. I wouldn't say though that's the worst job I've ever had, but it's definitely the hardest. That's definitely the hardest. Okay. It's nice and air conditioned in here. Yeah, I have air conditioning on over here because it's actually kind of getting hot already. Air conditioned in here, but crawling through attics in Phoenix in the summer. Okay. That's what everybody should be subjected to that has student loans. Okay. I will offer you the job. You can crawl through my attic. I'll pay, okay, just for you to be tortured. I think it's good. It's good. It's good stuff right there. S&P's still edging around. We have not broken, okay, above or below. We have not broken above or below. What is this very consistent line? And I know that Jeff Bierman's going to come on here in 8 minutes, okay, and he's going to tell you all about, okay, all about what? The MACD, okay, and the MACD, Jeff, I got your MACD right here, big guy. Anyway, okay. Down to the bottom of the screen over here, Costco. So I still have position on Costco. Okay. Somebody was asking about a QQQ position earlier. Okay. I don't have a Q position on. We closed that a while ago. I mean, that thing was okay, over and out. That's what the whole text messaging thing is for, right? Anyway, oh yeah, I was looking at Microsoft there again. Sorry, was catching my attention. Anyway, I do not have any positions in the QQQ. Costco, I still have on. It's up about 6%. But Costco is one that, look, this move is no move. $3 move is no move on here, right? It's this one also. If we have a good sell-off, like this probably gets sucked right down, we'll be in some good shape. By the way, do not worry about the dividend. The dividend will not have any impact whatsoever on the calls of our position. So we're good with that. Okay. Um, sorry, I'm still cracking up about the Micron thing. $6 billion. You know, the funny thing is though, the stock like barely rallies. Maybe they barely rally the stock on $6 billion because they're, they know the company's going to go out and buy. Okay, golden toilet seats. Everybody gets one. Only in the C-suite though. Everybody's getting a golden toilet seat this week. That's a good use of capital right there. I see the dollar corner of my eye over here, still a little bit bid. Look, we kind of mellowed out right now, but I can't help but think there's a $40 expected move today. Yesterday was kind of sloptastic. I know that we sold off into the end of yesterday, okay? But yesterday was it was less a sell-off into the close yesterday and more just pushing right to the lower edge of the expected move. So I take it with kind of a grain of salt yesterday. But again, some of the trade has been really, really violent. The one, I would say, one of the biggest ideas and like, the parting thought that I'll give you here this morning, okay, is that the entire marketplace right now it's on that edge. Okay. And not just the edge of the expected move. We're on the edge of a much more significant, break in volatility. And one of the things that, again, I know, okay, that I haven't sold puts yet. I'm aware that I haven't sold puts yet. It's because, look, I'm more than aware that, oh, look, you're going to miss it, Don. We're just going to bounce right back up. And if we do, so be it. Okay. In this business, you see something on your screen, okay, that says like, if we bounce back up, let's get crazy. We go to 5150, we reassess and might still go down. Am I right? Okay. So that's a 100-point break back to the upside over here. Let's get crazy. It's even more than that, but let's say that we actually break to the upside and all of a sudden, you're basically 100 handles higher. We come back to 5150. That's great. Still can roll back over on that. But where we are right here, okay, we could see a significant volatility break, and that's when I'd want to sell some puts. Okay. And you're like, well, but nothing. Okay. The upside potential in here is absolutely there. It's permissible for this marketplace to rally. Okay. But the downside is really big. Okay. So big that I don't think I can actually handicap what that would look like. And I'm okay saying that. You have too many stocks right here, right now, that just not only they haven't seen any sell side activity, they're basically at all-time highs. And I get so bothered by that, okay? Because people are talking about a market that's starting to go near correction territory. Really? We're in a marketplace that you're telling me is near corrective territory. It was up basically 11%. Now it's only up 6%. Okay. So you have 5% sell side activity, a 5% pullback in the markets. But nothing has really changed. Okay. You haven't, other than some volatility starting to peak, out, nothing has really changed. Meta is still where, 46% year-to-date basis. Nvidia is still what? 75% year-to-date basis. Microsoft seeing a little slippage, but still not bad at like 10%. They're still dramatically and drastically outperforming. Okay. And that just does not sit well with me. Okay. Yeah, TD was actually pointing out the money didn't help Intel either. Okay. That's well, maybe because building stuff in the US doesn't help you, it hurts you. Okay. I'm not trying to be anti-US. Okay. Just nobody wants to work here anymore. Nobody wants to work. It's okay. It's okay. Right. Actually, if you think about it though, if crap's much more expensive to make here, okay, then of course it's not going to rally. They're like, ah, sucker, you took the money. Intel, okay. Oh, come on, you guys took the money. It's going to cost you that much just to be able to build crap here. It's like subsidies. And that's exactly what it is. It's subsidies because they know it ain't cheap to build crap here. All right, continuing. Okay. Um, I like that. You don't get new chips overnight. Sure you do. Okay. They just show up. You order them through Amazon. They show up. Okay. That's what it's about. It's about Amazon. Um, Speaking of which, man, everything I order from Amazon lately is just garbage. I'm a Temu person now. Here we are. We're right close to the upside break. I'm waiting a whole freaking hour for this thing. What do I get? I get nothing. Absolutely nothing. Anyway, I'm going to bring on the professor here momentarily. It's time to bring on Jeff. Okay, it's again less than exciting here this first hour. That is again, it's okay. I'm okay to go. Okay to go. But the only thing I've done this morning, just to recap, we're right like that break point is somewhere here, right? The only thing I've done this morning is I bought a call. I know, okay, you guys are all shocked. I bought a call, okay, and it's the only call I've ever bought that that's okay. In any regard, I'm going to bring on the professor here momentarily. He's got a great session in store for you. It's getting aligned, honing your support resistance plotting skills, part 2. So stay tuned. Again, I waited patiently for a break to the upside in these S&Ps. Clearly, we're right up against where we would see a substantial pop. Okay, hasn't played out that way. Hasn't played out that way. The volume in the S&Ps would have to be like in excess, let's say, of about 7,000 contracts. Okay, we're nowhere. And again, I want to clarify, as I said, as we start to kind of ebb and flow this morning, the volume is going to drop, which it absolutely did. You're going to know the second we break to the upside, which is only 2 or 3 points higher in the S&Ps. Okay, this will pop 8,000 contracts. It'd be good to go, but we're not there yet. And until we see the break to the upside, okay, you're just being put on notice. Even if we do rally today, you rally early on in the day, there's still plenty of time for people to sit there and go, it's my opportunity to get out. People are constantly thinking that. Stay tuned. Jeff Bierman is coming on here momentarily. We're a little off of our Thursday schedule. We have Corey Rosenblum out, so we're going to run Jeff Bierman next and stay in our normal rotation. Tomorrow is going to be interesting too. We're going to have some extended sessions tomorrow. By the way, tomorrow morning, there's going to be a session before the market opens. Stay tuned. Jeff's coming on right now.